So you will have seen in my last video, in terms of comparing self-employment and also being a limited company, the comparisons between the two and also the tax between the two. This video is specifically going to focus on self-employment tax returns in terms of the taxes that you'll pay and how you'll pay those over to HMRC each year. It's really important that you firstly distinguish between revenue, which is the money that you take from your customers for each service that you provide or goods, and the difference between that and profit. And profit is the amount of money that you make at the end after you've received all your income from your customers and you've paid all your expenses for your suppliers, such as the purchase of those raw material goods and any overheads such as light, electric, wages and salaries, etc. It's only actually the difference between those two, income and your expenses, which is your profit, that you'll actually be taxed on as a self-employed person. Now, in the UK, we have something called a personal allowance. Everybody gets this, whether you're employed or self-employed, and you get this at £12,570 per year. And that first amount that you make up to that, between zero and that threshold, you'll be taxed at 0%, so you'll take all that income home. There are also further tax bands at 20%, 40% and 45%. So the first band is the basic rate band at 20%, and you'll pay this between your personal allowance amount and £50,270. So the difference between that, you'll be taxed at 20%. The higher rate band is taxed at 40%, so any income earned over the basic rate band and between that and £125,140, you'll be taxed at 40% tax. And finally, there's an additional rate band, which is anything over your higher rate band of £125,140, and you'll pay 45% tax on income earned over this amount. It's also important to note that after you go over £100,000, your personal allowance actually starts to taper, and it reduces by £1 for every £2 earned over £100,000. If you're earning employment income from a limited company and you're also self-employed and you earn money on the side, the money that you earn from your self-employment will also go towards your tax code and your overall income for the annual year. So these will be combined together and used as one. Now, if you want to see how the income tax is calculated as a sole trader versus being a limited company, please check out the first video that I've done on that, and that will explain different level thresholds in terms of the amount of profit that you earn and the level of tax that you'll pay at each stage. There's common confusion between the amount that you actually earn as revenue or profit and the difference that you actually take home. These aren't the same amount of money because you must pay tax on the money that you earn, so you will always take home less than you've actually earned. And if you want a bit of a tip on this, there's a HMRC guideline and there's a little tax that you can use online, and this tax calculator will be able to predict the amount of tax that you'll pay based on a predicted income, and it'll tell you how and when to pay this relevant tax. So there are now two taxes that most people don't understand when it comes to self-employment tax. It's Class 2 and Class 4 national insurance. Class 2 is paid at £3.45 per week over earnings above £6,115 per year. This goes towards things such as state pensions and other sort of benefits that will be used in the local area. There's also Class 4, which you'll pay 9% national insurance on profits between your basic rate band, which is £12,570, and your higher rate band, which is £50,270. Anything above that band, you'll pay 2% on. It's also important to note that you will not pay national insurance if you're under the age of 16 or if you're over the pension age in your country. So what I'm going to do now is I'm going to take you through a worked example of national insurance contributions and show you how they're calculated and the results that you get from that. So you'll see here, this is going to be self-employed taxes at Class 2 and Class 4 national insurance in 2024 and 2025 tax year. The flat rate is £3.45 per week, which I've already said to you, and that is basically paid only over small profits, which is actually £6,725 for the current financial year. You'll also pay 9% of profits between your personal allowance and your higher rate band, and you'll pay 2% on anything over your higher rate band. To show you an example that I've got here, you can see here below your profit level to start paying Class 2, you pay 0. You pay no Class 4 either, so your total NI is 0. You'll see as you slowly go up, because of the bands, so you'll pay at £10,000 profit level, you'll pay Class 2, but you won't pay Class 4 because you're not above the £12,270 threshold in order to pay that. And progressively as you go up, your Class 2 will stay pretty consistent because you're paying £3.45 per week for the whole year, so no matter what your profit level is, this will always stay the same. but it's actually your class 4 that will continue to rise, because you'll pay 9% up to a certain point, and then you'll pay 2% above that. So I'm now going to briefly explain to you how self-assessment works and some of the key deadlines. I know I've touched on these in a previous video, but we're going to go over them in more detail in this particular section. So the first one, arguably one of the most important, is the registration. You must register by the 5th of October following the tax year that you earn the income. If you're filing a paper return, which is actually now being phased out, you must do so by the 31st of October following your registration or every tax year subsequent to this. If you're filing an online return, which most people do, whether you're doing it yourself or you're paying for a tax advisor or an accountant, you must do so by the 31st of January following the tax year that you earn the income. And you must make payment whether you're filing by paper or you're filing online by the 31st of January. Therefore, if you're submitting it on the 31st of January, you must submit and make payment at the same time in order to not incur any late filing and penalty fines. So I've already touched on again in the previous video in terms of finding out how you submit it, who needs to register as well, and you can find various guidance on the HMRC website online under the self-assessment section. So what I'm going to show you on screen now is we're going to assume that your year 1 tax was £2,000, and therefore we're entering year 2, and I'm going to show you a work example to work out how much you'll be paying across the year before you get to the end of the following tax year. So you'll see here, in this work example I'm going to show you, that this is looking at your tax bill over £1,000, less 80% of it was collected via PAYE. So typically, you'll see here, you'll want to pay 50% of your year 1 tax bill on the 31st of January on the same day, and you'll then pay 50% on the 31st of July towards year 2, and then you'll pay a balancing payment in January. So you'll pay in 3 instalments based off your previous year's tax. I'm going to show you now quickly in a worked example. So this worked example here is going to show you that your tax bill for year 1 was £2,000 and it's due by the 31st of January in year 2. So this will show you when you need to pay. So on the 31st of January, you'll pay £2,000, which was your year 1 tax amount. In year 2, you'll pay a payment on account of half of that tax that you earned, and you'll also then pay half again in the 31st of July. And this is used by HMRC as a guideline based on your previous year to estimate how much tax you'll pay, and they'll want to reclaim some of that tax beforehand. When you get to the end of the year, which will be on the 31st of January of the following year, you will then pay the balancing payment based upon the exact tax that you need to pay in that particular year. So actually what you'll find is that your total tax paid in year 2 will be all the amount that you paid that you owe in year 1, and it'll be the 2 lots of 50% of the same value that you earned during the year in year 2, and you'll then pay a balancing payment in year 3 at the start of that. So you'll see here, if the end of year 2 your tax bill ends up being £2,500, you will owe just £500 on the 31st of January in year 3 because you've already paid £2,000 in the previous January and July. If your tax bill ends up being lower, HMRC will owe you £200, they'll either refund you or most likely they'll offset this against your future payments that you'll eventually owe. Because you're going to be paying up in instalments that you've just seen, it's really important that you cash flow plan, making sure that you've got the income available and the money saved so that you can pay these instalments off. If you actually find that your profits are reducing and they're falling over the financial year, you can get in contact with HMRC to explain the situation, to explain that you're expecting a significantly lower tax bill in the subsequent year, and what they can do is they can help you to reduce your payments on account to a lower amount, and this should actually help you out for both cash planning and also what your actual liability is going to be at the end of the year. So I touched on briefly about needing to submit before the deadlines, and it's really important you do so. There are various fines and penalties that HMRC will impose on you if you don't stick to these guidelines. The first one in particular will be the payment on the 31st of January and the submission via online for self-assessment tax return. If you don't do this, you'll get straight away be hit by a £100 fine. If you don't pay and submit this within the first 3 months, you'll then be charged £10 per day subsequent to that 3-month deadline. The longer that you delay, and if you continue to delay further, the higher the fines and penalties get, and you can actually then be charged interest on the tax that you earn to HMRC, and your debts can quickly rack up quite high. So it's really important that you submit these on time, you pay accurately, and you do so every single year. So that really focuses around the submission being late. There's also late penalties for payments being late as well. So whether you submit on time but you don't make the payments, there's also penalties for this. So there's a 5% imposed after 30 days of non-payment. There's a further 5% imposed after 6 months, and a further 5% imposed after 12 months of non-payment. The interest upon which is actually charged daily. So on top of the 5%, that will start to rack up. You'll also be charged interest, which is the same as making sure that you submit on time. There is an appeals process, so if you've done so and you've submitted it on time but they're charging you interest, you can go for an appeals. Or if there's a specific reason why you are unable to pay your bills, or valid reason for that, you can submit an appeal and HMRC will review that to establish whether it's a fair and valid reason for non-payment, and you may be able to get some of those taxes and charges waived, but it's really important that you do so quickly and as soon as possible rather than waiting for these penalties to add up, and also that you discuss with a tax advisor or an accountant in order to keep them in the loop as well. The simple ways to avoid being late is making sure that you've got your calendar set up with all the penalties and deadlines relevant to each stage. So making sure that you've got reminders for each time submissions need to be made and also payments need to be made. So hopefully this video has been nice and useful for you. This is obviously explaining about the self-assessment tax returns, the taxes for class 2 and class 4, looking at the penalties, how to submit and various examples along the way.